whatever. I don't think so. So I think you have a good chance.
Yeah, I think we need to step our game up. If we play like we played when we scored the goals, then yeah, if we play like that throughout the whole game, I think we got a good chance. But you never know. We like to fall flat on our faces at times, but we shall see. We shall see. Apart from that, you have a good weekend?
Yeah, all good. Nice and quiet. So yeah.
Yeah, good.
Not bad.
How about you, Kate?
Christmas decorations. The whole week.
Oh dear.
I've got my tree up as well. Are you doing the same?
Oh yeah, I mean inside, outside. It's always an event at the Case place when Christmas arrives.
Yeah.
Last year it took us a week to do everything.
Oh, bloody hell. Can't wait to get your electricity bill next month as well, I suppose.
Yeah, as well.
Right, well let's get stuck into things. I hope all the viewers here today had a great weekend as well. Going to be a bit of a quiet week this week on the data front. We'll look at that in a bit, but first we'll just review what happened on Friday. Obviously the jobs report was the big event on Friday. A decent number coming in at 263k versus 200k expected. The prior month 261k got revised up to 284k. Unemployment rate stayed unchanged, and that was a bit significant considering that the participation rate dropped. Sometimes you can find that has an effect of putting down the unemployment rate as well, but that stayed up. So a little bit of a counter to the good numbers there. One of the big numbers was the wages numbers, which beat expectations by 5 pips and was higher on last month as well. So wages keeping inflationary pressure on in the US, obviously doing a bit of a chase compared to what inflation is. But as we've seen inflation coming down in the States, it may find an equilibrium level at some point, 5-6%, something like that. We shall see. But on the whole, pretty good numbers from the US, which is sort of not buck the trend of the jobs reports because they've been pretty similar, but it's bucked the trend of the weaker data we've seen in a lot of the other sectors and data points, PMIs, ISMs, all that sort of thing. So for now, the jobs market isn't on the slide as far as this one is concerned. That keeps Powell's soft landing still in play there. Obviously, what we saw was quite a stiff bounce in the dollar, a lot of dollar pairs, and I was expecting that to maybe continue into the close on Friday, but it didn't. It got reversed really quickly. Again, as I was saying all last week, I expect any dollar rallies to be hit pretty hard, and thus they were. Canada as well had their jobs out, and again, better than expected. Another positive number there, another positive for the full-time, part-time revolving door, i.e. more people going into full-time work than part-time. So that kept the jobs market looking fairly solid over there. A drop in the unemployment rate to 5.1% in Canada. So that makes the prior report, the October report, where we got that 108k, that big 108k. I was expecting maybe to see a bit of a washout there, but it hasn't. So the trend is still looking good there for Canada as well. Coming into today's last night's and today's numbers, services PMI final numbers for a lot of places. Australia there, a bit better than expected, but still massively in contraction, 47.6. Coming across to where we go now, Japan there, services as well, a move up, 50.3. So a bit better than expected there. Again, we're seeing a bit of a disparity between services and manufacturing over there as well. Into the Eurozone for some of the numbers there, Spain, improvement there, 51.2 versus the 50.5 expected, and into expansion again. Italy as well, bit of an improvement, still in contraction though, pretty similar for France, same for Germany, better than the prior month, although it was a bit lower than the flash, but still heavily in contraction. The same all the way down, the pan-Eurozone number and the UK numbers there as well. Retail sales came out this morning as well in the Eurozone, a little bit worse than expected, down 1.8% month on month, down 2.7% year on year for October. So let's have a quick look at the data coming up this week. As is often the case, it can be pretty quiet the week after the NFP. So we've got a bit of data coming up, final numbers for the PMIs in the US, factory orders there. RBA, we've got quite a few central banks coming up. This month is a big month for central banks, and I'll get a little list up in a moment. But it kicks off with the RBA coming up tomorrow night or this evening, depending on where you are in the world. And then the Bank of Canada on Wednesday. For the rest of the data, bit of industrial production on Wednesday from Germany, retail sales, old GDP, so on and so forth. But really, the rest of the week is fairly quiet. We get the Michigan number kicking off and PPI on Friday from the US. But as I say, overall pretty quiet. As mentioned on the central bank front, let's just pop this up for you. This is what we've got coming up this month. So as mentioned, the RBA tonight, Bank of Canada on Wednesday. Then we have the Fed on the 14th, and then we have the ECB, Bank of England, SNB, Norges, and Banxico on the 15th of December. And then we're probably done by the Bank of Japan on the 20th. So this will all be part of the running this week, or rather the week of the, I think it begins the 12th, is it? Through the 15th, 16th. That will be a big week for markets because it is the last of the central banks, the last real week of trading before the year end. Things will go quiet from probably the 20th, 22nd, that sort of time. So there's going to be a fair bit of business to be done for end of year, that sort of thing coming in that week there. As I say, it kicks off with central banks this week as well. Right, coming over to some of the headlines over the weekend and from last week. In China, the big news or the continuing news is further reopening in a lot of cities and regions in China, pulling back on some COVID testing for large venues. Cities like Shenzhen and Zhengzhou are checking PCR results for some entry to different venues. In the Zhengzhou area where the big Apple plant is, they're going to hope to resume full production between late December and early January. And the local government is pushing hard to on a recruitment drive to get people back in the factory. A lot of people did a runner when they said they were going to lock down. They ran to the roads, jumped in cars, jumped in anything they could to get out of there back to their own towns. So it seems they need to get a few more staff in to get that back up and running. China, according to the NDRC, is also going to lower retail fuel prices from tomorrow as well. So a bit of relief, inflation relief coming in there. Over to Japan, apparently Kishida has told the government to put aside or earmark 43 trillion yen for defence spending to happen over the next 5 years. And they will decide on the possible funding sources by the year end. So this is another batch of fiscal money being dreamt up out of thin air to pay for defence. This is on top of all the extra budget stuff they're doing. So as Kay is fond of saying, you know, still with the fiscal measures in Japan, still pumping a lot of money there as well. Over to the ECB. ECB Guindos said there's a high probability of a Eurozone recession, but the economic deceleration will not be as deep as expected a few weeks ago. The inflation data for November has been good news, but inflation in the Eurozone around the middle of 2023 will hover around 7%. That will still be way above, obviously, the ECB's target. What they'll do with that on rates, we will find out hopefully in December at their meeting. French ECB member Villeroy said that on Sunday that he favours a 50 basis point hike, but it's too early to speak of a terminal rate. ECB's Makhlouf also sees a 50 pip hike as the minimum at the upcoming meeting, and they have to be open to policy rates moving into restrictive territory for a period in 2023, but does not think they're in restrictive monetary policy rate territory right now. Also, the ECB was out saying that they are ready to maintain all existing temporary swap and repo lines with non-EU area central banks until 15th of Jan 2024. This is part of a long list of measures, or long line of swap measures that central banks enacted between each other just to help with liquidity. It's been ongoing ever since the GFC, and obviously up again through COVID. But they're keeping those doors open, or at least the ECB are. Expect the others to follow suit as well. Bank of England's Dingra said that UK rates should peak below 4.5% to avoid a deep recession. Over to the Riksbank, and they released their minutes. So when we get those, we get basically the views of every governor, deputy governor, and bod on the board. Riksbank's Floden said the krona has been so weak that I'm convinced that in a slightly longer term it will strengthen, even if we raise policy rate a little less than other central banks. Ingves said the rate path is a reasonable forecast, but would not be surprised if rates needed to be raised more. Jensen said preparedness to revise the policy plan must remain high, and belief the policy rate will not need to be much higher, and that hopefully the largest policy rate hikes are behind them. Moving over to the Fed, only really got Evans out, not a lot. He said he's probably going to have a slightly higher peak to the policy rate, even as we slow the pace of hikes. He got those comments in on Friday before the blackout on Saturday. So, yeah, the Fed's in blackout. So hopefully a bit of peace and quiet until the FOMC. That's all I've got on my rough. Oh no, a couple more. I'm missing them. I'll need to have a look. Yeah, more from China. We had the US. The Deputy Secretary of State Sherman said the China-Taiwan war is potentially possible. US efforts are to deter that possibility. And Canada's getting in on the act. They're going to send more warships through the Taiwan Strait, apparently in a signal to China. China's foreign minister was also asked whether Beijing would abide by the oil price cap that's apparently going to be placed from European and US. And a diplomatic answer of China and Russia will cooperate on energy on the basis of respect and mutual benefit. We can probably take that as a big fat no. That is the end of the headlines. You guys got anything you've seen you want to add?
The only thing I've seen is that OPEC is planning to keep his oil cuts going until the end of 2023, but we know that can change very quickly. But there was a bit of there were a bit of questions around the fact that they may cut even deeper when if oil continues to go down. But for the and to counter those the Russian oil sanctions, but apparently they're just keeping it as is right now, and that's the only other thing that I've really seen.
Yeah, cool, mate. Thank you very much.
Nothing from me. You covered it all, man.
Lovely, jubbly. Good to see it all covered. Let's have a look quickly at the rate odds. For the Fed, we're still pricing 50s and 75s. Not much change in the probabilities. The 91% probability of a 50 pip hike, the 9% balance going for a 75. I'm still wondering whether that's going to flip to 50-25 the closer we get to the FOMC, seeing as 75s are potentially off the table, but still some pricing there for 75 still in the mix. The ECB for their next meeting, a 50 pip hike is 82.5% probability. 75 pip hike is 17.5. Still think perhaps a 75 could be on the cards. So that might be the shock result on that one. Bank of England pricing 84 or probability of 84% for a 50 pip hike and a 15% for 16% for 75 pip hike there. Bank of Japan, 3 guesses, no change, nearly 97%. So looking at some of the price moves now, China, obviously $1 has been a big mover overnight as well, busting through the 7 level with quite some volatility all the way down to near 95, 6.95s. We were playing the long side on this one on Friday. Had a long at 701, managed to knock some of that out. 706, got stopped on the trailer, 703.50. I did get triggered on an order at 70.50 or 700.50 last night. That didn't survive when I woke up this morning. That went at 6.98, so gave a bit back on there. Bit of a hole, this one, AK.
Yeah. But the thing was, what we had a good impression, or good how shall I say, feeling for the Friday data, saying that dollar rallies may be sold into. So I was pretty fortunate that I was low as well, as you know, and I let mine go at 707, which was pretty close to the top. And since then, I haven't been involved anymore, because of the dollar selling off so rapidly, and also with the weekend ahead. I pulled all my bids, and happily so. Going forward, we are below 7. That's the first psychological barrier now, but 690 is pretty important as well, and even already the 696. Technically, here there's a bit of a trend line there as well. But I'm looking at your daily there, and it starts to look like a bit of shampoo. That one, a bit of a head and shoulders there forming. So,
yeah, I remember. I think someone was saying it was looking at the head and shoulders last week. This 690.91 area is the next potential big support point. We'll see if
yeah, the 701, 702 seems to be the neckline. I'll have a look at that later.
Yeah, you can
but
have a look at that one.
Which is going to be a bit logic as well. If you stay below 701, 702, give and take the weak stops. If we get back to 7 taken out and then come back down, it's going to be, yeah, the head and shoulders. But then on the other hand, psychologically, it's going to be the same, right?
Yeah.
Whether you just trade the big 7 or this pattern, yeah, I think your stops are going to be somewhere exactly at the same levels.
Yeah, for me, I'm probably going to let this one. I'm probably going to watch this one for a bit. I'm not inclined to fight this too much on the long side, this side of 7, particularly as I'm a bit more obviously dollar bearish overall. But yeah, if we start seeing resistance coming in around 7s, the cases 701, 702s, this area here. That's going to be
might be worth having a little short just to see if the 702 hold, you know.
Yeah, that's what I'm thinking. That's your area. If we get up to there and we can't get through 702s, probably call it 703 to be sure, then we're probably going to be either having a bit of range play between that 690, 91 and that 702 area. So yeah, maybe shorts from that side are the way to go forward, especially while the reopening snowball continues. So yeah, looking at dollar yen now, and bit of a wild ride. Obviously, we got a big bounce over the NFP all the way up to near 136. So quite a decent move there. But it did get hit fairly quickly. By the time we closed on Friday, we're down back into the 134s. As I said, I was been saying it for the days into the NFP. I expect dollar rallies to get hit pretty hard. I just didn't expect it to get hit that hard so fast. I thought we might, sit 135s, 130 between 135, 136 into the close on Friday, because we had come a long way in last week. But no, it got hit hard. I think perhaps we've got a bit of balance now because it has bounced again. So that's going to keep this low down in the 133s really important, because we've come off this bounce, but we couldn't get back into the 133s. That could be a bit significant now. Have we done all we're going to do as far as the dollar is concerned until we get to the FOMC and see what comes from that? So from here, as I say, yeah, bit of balance perhaps. 136 is going to be our first marker. Got an old line here, support and resistance area 135, 50, 60. So that's really the close level to watch right now. We had it as resistance. We had a breakdown point last week. We held below it before getting the move down to the lows. Data print pumped it higher, but as straight after we found it as resistance again. Coming up here this morning, we're getting close, but not close enough. And it's finding resistance again. So there's a bit of a marker for us for the short term, at least this 135.50. Break that, we're probably going to move up to have another look at 136. Then we have the 136 2030 area to look at after that. But yeah, potentially maybe a bit of sideways action between sort of 136s and maybe 134s, maybe down to this 133s lows again. I'm still short this one from up above. I've got my trailing stop currently at 136.50. So if we do get a move up above this, then I'm going to be looking at getting knocked out on that. Otherwise, I didn't take any off in this move down to here. But if I get another move down there, I may look to take a bit more off the position, maybe tighten the stop a bit more on that. It's been a similar picture for a lot of pairs. You know, we hit new highs this morning, early in the morning, just mixture of risk on, obviously dollar getting sold off, the bounce that we saw getting sold off there, China as well in the mix. So we did hit new highs in euro dollar, but we've eased off a bit there. So it hasn't been maintained. Again, maybe a bit of balance finding in the market. Same for Aussie dollar. Move up to my next level, 68.50, just ahead of the fib that I'm watching as well, 68.70s. Again, banging our head, can't get through it. Now we've seen a bit of a sell-off. This 67.70 area is probably going to be key for this move at the moment. So just this sort of zone here, 67, 70s, 80s, was a form of resistance point, as we well know. Got the break, we're holding above it. I'm inclined to forget the NFP spike below it because we had that move, bit volatile, but right after it's held in that area again. So for me, the ballpark is between there and this 68.50 area, then possibly that fib at 70. It's all about, if we get below here, we're probably heading a bit further down, maybe to the prior lows on Friday. If we can break the 68.50 and get above 70, then we're probably going to push on to 0.69, maybe a bit more. I'm not doing much right now. I'm just seeing where prices are going to do, what the dollar's going to do for the moment, see where things are going to settle down, what levels are going to develop straight after the NFP. So I'm a bit of management mode for me. Guys, you got anything on the horizon you're looking at in particular?
You mean trades-wise or in general?
Yeah, just anything you've seen the fallout from last week coming into this week.
Well, you know, the move last week was pretty intense. You know, yields dropped quite a lot. I think we are in danger of a little correction because, as always, the market goes very fast, very quickly to price in the good stuff. So, and I think Blake did an interview with Jim Welch on Friday, and we just posted it this morning, and he was talking about exactly the same thing, that the dollar is potentially ripe for a little rally, like a counter trend rally. But overall, I think what Powell did the other day, even though it wasn't really news what he said, it kind of confirms the start of the next phase, let's say, which is slowing down and going back to neutral. The big question, obviously, being how long does the Fed stay at a certain level of rates before they start cutting again? And I think that's what the market's probably mispricing right now. But I think that in this week maybe there's a good chance of a dollar reprieve, and which means that stocks lower, risk lower, bonds lower. But I do think that things have changed, and if you look at if you're a ForexAnalytix subscriber, you look at my macro analysis. My bias for bonds had been bearish for quite a while, and I've now moved to neutral because I think that being bearish bonds at these levels, obviously there could be a little bit of a spike lower as a like a counter trend reaction, but I think we're done. I think we're close to peak rates, and the 10-year I think is probably not a good risk reward short as it was months ago. So
Yeah.
I think that for this week, for me, chances are that there's going to be a little bit of a dollar rally as a reaction, a relief rally, let's say. But I think that we very well may have seen a very significant top in the dollar. Just my feeling.
Yeah, I agree, mate.
So position wise, what do I think? I have I had started accumulating a little bit of silver longs, not massive, not full size by any means, but accumulating some longs. I want to add more, but I want to find these sell-offs in risk as opportunities to add more. And currency wise, the one I'm looking at is the dollar mix. I want to find nice levels to sell it. My favorite currency to sell against the dollar. We are hovering quite close to this big support. We are obviously bouncing now, but 1920 something, I need to check the chart again, is a massive level. And remember, if you're shorting this, you have very good carry. And I just want to, if we get anywhere near 1980, which is those all those lows before, I think that's a nice, there you go, yeah, that roughly there. I think that's a nice little because you got a few moving average that are going to be converging there as well. So I think that's a nice little range to play on the short side if we get there.
Yeah, agreed, mate. Agreed. And I think we're gonna have this period in the run up to the FOMC where it's not so much the market is scared that they're going to get something more hawkish, but I think it's another case where it wants confirmation of this move of 50 pips. It wants confirmation.
Yes.
Of everything it's heard from Powell and everyone else. Make sure that this rate ceiling isn't going to go significantly higher, and make sure the message isn't too hawkish. But the reaction is going to be defining. I think we've had a big move in yields. We've had a big move lower in the dollar. So the table has flipped, I think, a bit. Now it's going to be a case of, how dovish can they be, or how dovish can the market get extra to send the dollar even further lower. So for me, it's just about, we've had a big move already. Doesn't mean it's going to keep going for another 1,000 pips or anything. So I want to see where the decent support may start to come in for this phase of monetary policy, and we'll get those answers at the FOMC. As always, in this trading game, we're always waiting for something, even though it's 10 odd days away. That's what it is. Kay, do you want to have a little look around, or give us your input on what you're thinking at the moment after last week's events?
Yeah, okay. Well, you've already covered dollar yen and everything. Let me have a quick look, perhaps, at the cable.
Yeah, well, always happy to get your thoughts if they're different, mate.
Are you guys seeing the cable?
It's coming off a little bit.
No, are you seeing it? Are you seeing my screen?
Yes, we can. Yeah.
All right.
Sorry, I thought something groundbreaking was happening right now, and you're like, "Well, are you seeing this?"
Yeah, it's coming down from 122.48 to 122.47. It is absolutely collapsing. We had this little breakup, and I'm going to show this once more. There was this bit of a trend line, and then at the same level, we had this 200 DMA in the cable that gave way last week into the end of month, and then since then we had one retest, and but we really didn't go below there. So for the more I wouldn't even call it medium term because cable is so volatile, but for the first really decent support is going to be around 121.5. We had a little overshoot of the 123. There's other stuff going on than just this top around 123. But anyway, we had a bit of an overshoot of it, and now it is gradually losing steam. We broke out of this little wedge. But it's not been very well respected. So I'd say still watch the 123, the high that we just printed above there. But if we would start to come off a bit further on the really short term, there's perhaps some interest around 122.25 here. But I think the bigger level we should watch now is this 121.40, 50 on the cable. That's one I'm going to keep an eye on because it's also, we tried to break it on the NFP on Friday, and it's got really rejected pretty hard. So it's going to be a level that people are watching. It's also the prior high here. So really keep an eye on this 121, call it 40.60. If 40 goes, perhaps things would be changing a little bit in the cable. On the Aussie dollar, I was watching it as well into the RBA overnight. To me, the level is going to be Ryan's 67.70 is exactly where it is. It's also the break of this triangle. So 65.70 is where we have to look at where it ends up after the RBA. It was also the low on the open overnight around there, and I'm a little surprised that the Aussie is not higher or can't keep the highs. We rushed up to 68.5 on the back of the Chinese opening, and then dollar China really went down fast. We are 1% lower. Yet the Aussie is just trading, what is it, 20 pips, 20 odd pips above the opening. So perhaps there's still some people who don't like the relative softness of the RBA. So 65.70, and then add 67.40 in there. If it goes below on after the RBA, I would actually not trade Aussie on the back of China. I've seen, as people pleased to do, and we all did for years. I would be quite careful with the Aussie and stuff like, for instance, Aussie Kiwi as well. So watch these levels. These two levels, I think, are going to be pretty important. Top side, well, today's high around 68.5, and then there is this trend line coming gradually off as well around 68.90, 69 the figure, and just above 69 there's 69.20.30. That is going to be a pretty interesting zone in my opinion, because it's also a prior high here. So if that would go after the RBA and the market says, okay, China is doing well, Australia is going to benefit from it, RBA is not as dovish as people expect, that could be the signal to go and change the big figure on the Aussie. So we've got call it 150, 140 points to play inside to make a decision on the Aussie, in my opinion. Yeah, dollar yen pretty much covered. We went below, but then it's going to be a bit messy, this chart. But just this one, the 200 daily moving average is around 134.60. I reckon people are going to watch it again. And then there's we were talking about this 133.30 to 133, the figure double support as well. So keep that in mind if it would go back down. And then in the 135.60s again on the top side, just 136.25 around here, and then 136.75. So every 50-60 pips we should find resistance in the dollar yen. But I'm kind of in agreement with the colleagues saying that we may have seen the worst for the dollar in the short term. We have traded the slowdown. We have seen data gradually, the leading indicators gradually worsen, but the last domino, which is a really big one, is still holding firm. So I'd be a bit careful. I'm a bit skeptical to be short dollars right now. I am trying a little Aussie, but it's really close to the chest to see if it holds this 67.70. But for the dollar yen, I don't know. This if it would go anywhere close to those lows around 130, it's going to be really, really itching for me to start to build up a long again. I don't think the dollar is dead yet overall, so that's still my base view. Yes, we saw about half of the dollar rally has been undone. The 2022 or 2021, 2022 rally has been undone. Yeah, it could be enough actually for now, but if it wouldn't be in stuff like dollar yen and also based on the fundamentals in Japan, I'd be really, really, really. It's going to itch a lot if we get anywhere down to from 131 3/4 down to 130. I'm going to get really interested in getting long in this one again, unless something changes fundamentally in the US or Bank of Japan changes something dramatic, which I doubt for now. But that's the more medium-term play on this. Metals, interesting. This gold, it's running into resistance around just above 18, as we were saying, 1802, 1806. Those have always been levels where gold had a bit of activity, if you see from prior high lows as well. And then we have this little trend line coming in around 1817. I think it's going to need a weaker dollar from here to bring oil higher, because I'm actually quite surprised that both metals are not much higher on the back of China. Seems as if the market is still a bit reluctant to believe what China is doing.
You're absolutely right, Cayman. I think the what's holding them back for now is the fact that yields are trying to bounce a little bit, dollars trying to bounce a little bit, and you know how this short-term correlation works with metals. It's insane, but it does. Anyway, that's my view on it. I mean,
yeah,
could be wrong.
Yeah, but and that's the thing. It brings it back completely to a dollar trade, because if you would, okay, perhaps in this move we had perhaps a bit of China in there as well. But if you look at metals, they should have been higher with China trying to soften stances and stuff. We had the jump in silver. We did have it. We had the jump in silver, but now we're already back at 23 bucks. It's a bit strange.
I think gold also being so close, like you said correctly, at this huge level, 1800-ish is very big. So that's probably one other thing holding it back just for now. Just
purely the
technically, I don't know.
Yeah, okay. Anyway, in silver, I'm watching it carefully. I'm actually hovering pretty close to the buy button right now, but it's going to be in small because I let some of my long-term silver go into the NFPs, but I mean very, very small stuff. And I was looking to buy back around 22 and below, but we've never got there. So even if it deteriorates my global average just a little bit, I might start to buy small slices of it back with ads anywhere between 22 and 22 and a half if we see it lower. So that's the base ID somewhere to start the week. It's not based on dollars, this one, but it's based on reopenings and actually data holding a bit better, in which case silver, I think, could be the outperformer still compared to gold. You guys were talking about the mix. Yeah, there's a lot going on in mix around those prior lows. We also have a bit of a trend line resistance. We have the red line from the 2017 coming in the 60s. So anywhere between 1965, 1980, 85, then we may find the resistance in dollar mix. So keep that one in mind. Otherwise, we're still in the medium-term downward channel for as long as we don't break back above 2030. Euro mix, I'm going to leave it a little bit alone. It's had like a big jump. We went through the same-ish red line as we have on dollar mix. We went through it around 2040s. We are trading high 2050s. I'm going to be a bit patient here and let the market develop and see what it says. We've got 200 DMA around 2080. That could be enough with the prior lows, prior highs. So it's a little bit like the dollar mix. Just add the percentage difference of the euro dollar to it. So yeah, around here. Well, dollar-ZAR, I'm just watching it. I don't know. I haven't seen the news on Ramaphosa. It came back down to 1720 here, but that's just politically driven right now. I'm not even thinking of opening positions in dollar rand. And then, yeah, as we were saying on the dollar China, to me, the first level is around here, 696, 697. And then, of course, we are having this 701, 702 zone that we talked about. If you feel like China is taking the upper hand again, you can lean against the 7, and then if it breaks above 702.5, 703, get out of there. Otherwise, 690 is the next level that's waiting for us. 689, 691. That's where the next support lies on dollar China. As usual, I'm going to pay very close attention to how the PBOC fixings evolve to make my next decision in dollar China. For the moment, it's sitting on the dock of the bay and watching the market. What's in the questions there? Is in on daily chart 200 DMA is respected the most? Okay, Alan, I appreciate your question. To be fair with you, personally, I'm not a huge moving average watcher on FX pairs. I think they're much better on stuff like metals, real stuff. Or on equities, or even on yields rates. I think they're much more watched and effective there than they are on FX pairs such as dollar yen or cable or whatever. But we can't look besides them because people are watching them. But then I do. A lot of people are trading on the back of them. I don't. Unless they converge with other stuff, like we've seen on the cable, for instance. And yeah, personally, I'm not looking at them on anything below the 4 hours. Daily being where I really would say that they are to be, or they could be respected. But that's just my personal view. I'm not the rule in there. Now in the Q&A,
there's a question. Yeah, there's a question for me
about bonds, and then the one before, will ISM, Charlie, will ISM non-manufacturing PMI move the market significantly? They are final. Oh, hang on, ISM.
The ISM is new. We got the final S&P Global and the ISM follows.
We have the ISM as well. So okay, ISM may be a bit of a mover, especially if the market is a bit how shall I say empty or illiquid on the Monday morning, still having the NFP hangover. It could be a bit of a mover. Yeah, but I'd say it's going to be more an algo mover than a real directional mover, in my opinion. And then, Stel, you take the Bunds.
Yeah, where would I sell the Bunds? It's a good question. I guess the first level, I look at weekly charts, right? The daily and weekly charts.
What's
I don't look at
what's the code here on TradingView? So I put it up.
Just type in Bund. B-U-N-D. B-U-N-D, not bind. I would say, oh no, why don't you have it? Oh, there you go. That's it.
This one?
No, that's not it. No, just type in B-U-N-D, go, and enter. B-U-N-D, enter. You should have it. There you go. So I guess the first level is a 50% fib of the previous of this latest downtrend, which is around 146.8. That one from there to 146.8 or something like that. But I really wouldn't want to get in the way of this just yet. I think. Yeah, that mid to high 146 is probably, but really I would want to see it get close to those previous highs, which is a long way from here. But the ECB is going to be dovish, I think, going forward. They're going to, when the Fed leads the way, everybody follows. So I think they're going to start singing the same tune, especially given that Eurozone inflation and German inflation are starting to show lower readings. Yes, very slowly, I know, but this is what happened with the US as well. And I've said it many, many times. I think Q1 2023, we're going to see inflation dropping quite substantially everywhere. So I wouldn't get ahead of it right now, Pedro. I would wait. And if you're asking for a level, I think that 146.80 is not a bad place. But we're not close yet. Okay, so that's my view.
Thank you very much, mate.
Anything else? Okay, shall I give it back to you, Ryan, or anything else people were looking at?
Yeah, we can. You can pass it back, and we can ping it back again if anyone comes up.
Euro sterling. Because I'm in it. Right. I've been trading it from the long end. Started around here. Added a bit more again the other day around 85.5. But as you know, I'm trading it around. There's a little resistance up around roughly where we are around the figure. I'd say the next one is around 25.35 around here. Then we have a little around 86.5. But despite what we heard from officials that they could be getting closer to some form of an agreement on Northern Ireland, I think it's good enough around this zone, with perhaps the pressing of the panic button if it goes through 85.40.30. It's good around this zone to just give it a little try. It doesn't have to be for a very long term. More medium term, it looks like one of those euro crosses where sooner or later we could see this giveaway. But in the meantime, I'd respect this little zone range, and why not? We have about 100 points to play inside, I'd say. If we start to get back above 86.70, not even, but we need to get back above 87 to really get higher again. But I think for the time being, just respect those ranges and see what happens. So the more medium term starts to break below 85.40, 85.30, be careful. I'd be quite careful, because if you look at the picture here, that would look quite bearish. So in the meantime, trade the ranges. And with that, back over to you, Ryan.
Thank you very much, mate. Let's grab that back. Just to add a bit more onto Charlie's question, will the ISM services be a market mover today? It potentially can be. And it could be fairly important. as we've been saying this morning, you know, I want to see where the dollar defines, where dollar yen defines the levels now. We've got two lows in play, down in the 133s and now down in the 134s. So if we get a bad number, if it follows the rest of the data that's been showing bad, if we get a bad number, these are the levels I'll be watching closely. If we get down to here and can't get further through it, that suggests we've potentially found a bottom for the bad news for the moment. If we get through that but can't get through that, the same thing, although it would look a bit weaker breaking this low here. But if we can't get below there, we have the potential for at least a short-term bottom in play. And that's the way you got to look at it based on this data. If it's weak, is it continuing what we've seen over the last few weeks in weaker data? It's not so much what it does on the upside. If it's positive numbers, yep, dollar's going to rally. Where can it go to? You know, who knows? But for the larger trend, which is this bearishness, that's the important side for me. If it's a negative number, can we break those lows? And the same will go for other dollar pairs, euro dollar. You know, can we get above these highs on another negative number? Aussie dollar, can it get above its highs? It's all about discovering what the price wants to do. And if we can't, if we start building, you know, longer term resistances, even though we're still getting bad data, you know, that's your clue that the market has perhaps gone as far as it wants to go for now in terms of dollar weakness. Just jumping into the moving average conversation. Yeah, I use moving averages a lot. And yes, the daily moving averages are watched by a lot of people. You know, you get Bloomberg, Reuters pumping up a story on this, that, and the other. They highlight the daily moving averages. And as Kay says, they are more stronger probably on the daily and 4-hourly chart. If you start coming below that, they do sort of lose a bit of strength. But yes, use them as confluences. If you get all moving averages in one particular area, that can mean a bit of potential confluence, and that makes it a bit stronger. Then you get into death crosses and all the other sort of stuff on the dailies when the other moving averages cross each other. So yeah, for me, it's the 55 moving average. Some people use the 50, the 100 and the 200. That's all you see on your screen now. Brown is the 50, 55, blue is the 100, green is the 200 moving average. Those are the ones I use. As far as that, just a touch back on Saurabh's point about trading different time zones. Do you prefer the US session to others, or don't really care? I take a position in any session if there's a setup for your systems. Yeah, when I look at positions, when I look at strategies, depending whether it's short term, long term, the time zone doesn't really matter. If I'm looking more longer term, if the price gets where I need it to go to get a trade in, I'll get in, whether that's leaving orders in overnight, mornings, whatever. Short term stuff, I will look at the clock. If I'm looking at a scalp or a really short term level trade and it's 10 o'clock in the evening, I'm not going to be at my desk to watch it. More often than not, I'll leave it alone and see where it is the next morning, because I like to see the price action on a short-term trade before I jump in. So it's a bit swings and roundabouts depending on your strategy. And with that, we shall call it a day for today. As always, wish you a great week ahead. Please trade safe. Please come and check us out on the ForexAnalytix chat room if you need any help with your trading, or indeed here in the Flow Show. Drop us a line in the comments, that sort of thing. Thanks as always to Stel and Kay, and we shall see you all bright and breezy tomorrow.
Have a good week.
Thank you. Go get some rest, Bran. See you guys.
Always resting that one. See you guys.